Good morning, everybody. Welcome to another fun-filled episode of Mortgage and Finance Solutions Fact Series. We have Phil Farija with us today, and we're going to be talking about the first homeowners loan deposit scheme that the government has introduced. Good morning, Phil. How are you?
Good morning, Stacey. Happy Saturday morning.
Happy Saturday morning, and I hope everyone has a good Mother's Day tomorrow.
We must look after our mums.
Oh, we definitely do. This morning we're going to talk about the first homeowners loan deposit scheme. It's quite a long one. I always shorten it to FHLDS in our emails. Can you share with everybody what it is and how it works?
Yeah, for sure, Stacey. The first home loan deposit scheme was announced earlier this year. It's to help first home buyers with small deposit enter the property market.
Fantastic. And so it was introduced by the government. How many spots are there and how does it actually work with lenders?
Yeah, for sure. Great question. So the Australian government issued 10,000 placements per financial year for potential first home buyers to enter the market. So that is divided between only two major lenders, which is Commonwealth Bank and National Australia Bank. And there is a number of small lending institutions, for example, Teachers Mutual Bank, Police and Nurses, CUA, there's a number of them that have got a certain allocation each month, so it's evenly spread amongst all players to enter the market and take advantage of this initiative.
Fantastic. So once a lender has an amount, they've exhausted their amount, they can't really take anybody else on in the scheme until their allocation, they get more in their allocation, is that right?
Yeah, so you can still apply. For example, let me give you an example. Commonwealth Bank's allocations seem to go very quickly, and National Australia Bank, because a lot of first home buyers seem to think of the big banks straight away. So if their allocation for that month is exhausted, what we can do is we can actually apply for a placement. So if a placement becomes available in that month, for some reason, someone doesn't accept another placement, that might open up a spot for someone to come in and take that. If not, they're on the list for the next month when the new allocations get put forward for that particular bank, and then they will get their placement.
Okay, fantastic. So typically a first home buyer has 5% deposit, they've got to pay lender's mortgage insurance, but this scheme assists them with that. How does that work?
Yeah, this is a little bit unique. Lender's mortgage insurance is what everybody hates paying. So in this scheme, the client needs to contribute 5% deposit. Let's use an example of $400,000 because that is the maximum. Again, one of the eligibilities is the home loan size, and so 400,000 is the maximum in the Perth metro area. So in this example, the client would need 5% deposit, which would be $20,000. So the difference to avoid the lender's mortgage insurance with this scheme is protected by the Australian government. So the government are effectively giving a guarantee to the bank, protecting them in the event that this loan goes pear-shaped. So there's no need for the lender's mortgage insurance, which ultimately saves the client a premium of lender's mortgage insurance, which can be multiple thousands.
Yeah. You mentioned eligibility criteria. What are some of the other, besides loan amount, criteria to access this grant?
Yeah, one of the biggest eligibility criteria where a lot of people fall over is both applicants, if it's a couple or if it's a single applicant, they must be an Australian citizen, which is a little bit different to the first homeowners grant, because the first homeowners grant, only one applicant needs to be an Australian or permanent resident. But this particular scheme is really targeted for Australian citizens only. So that's one of the biggest things that we need to look out for. There is also an income threshold. So if it's a single applicant, the maximum is $125,000. If it's a couple, the maximum is $200,000 as a joint taxable income. So they're two of the major criterias. The loan needs to be the primary place of residence. The loans need to be on a reducing basis. So we call that an amortization loan, where the loan must be paid back every month so it comes to an end. There's some of the
just your principal and interest repayments, not interest only. That's just that's just your principal and interest repayments as a loan structure, correct. Not interest only structure for clients.
No, this scheme does not allow interest only at all.
Okay, fantastic. So that gives us some really good understanding. There are plenty of options for first home buyers out there. Even without this scheme, we have the first homeowners grant, we have the shared equity scheme, we have Keystart, we have guarantor loans. There's a plethora of options for clients. I know that you've done a few of these scheme, the government scheme that we're talking about, and so has a number of our other brokers. You have a really good example of how we helped a first home buyer with all the different options recently. Can you walk me through that one?
Yeah, this was a great example. So this was a young person who worked in the hospitality industry who was buying his first home in Perth, permanent resident. So initially we were looking at getting a loan through one of the major lenders as a 95% loan, and he was paying lender's mortgage insurance. And this all started towards the late of last year. On the 1st of January, when this scheme came through, I realised that this would be perfect for my client. So I actually invited him to come in for another meeting to talk about this. So in the end, his focus changed. That instead of buying a home, taking advantage of the first homeowners grant up to $430,000, he thought, well, gee, I could save some money here if I brought my property purchase back to $400,000. So as it turned out, he bought a brand new home for $400,000. It was an apartment. We applied for the first homeowners grant. So he obtained the $10,000 from the first homeowners grant and zero stamp duty. We introduced the first home loans deposit scheme, which enabled him to enter with his 5% deposit, and we eliminated the lender's mortgage insurance with the guarantee from the Australian government under this scheme. And then on top of that, the lender had some internal incentives, which he obtained once the loan was settled. So in the end, he got a really good product, a low rate, super low fees, and he got some additional sweeteners at the end from the lender. So it was a great example.
That's a great example, and what a lucky person to take advantage of your expertise to pull all this together and enter the property market. I think you can get a better example of how easy and how much you can take advantage of what's out there to enter the property market at a really actually affordable level at $400,000. So thank you, Phil, for that. As I mentioned, for a first home buyer, it can be really daunting. There are so many options out there. I mean, Phil's just given us a great example about how he walked a person through the whole maze and showed them everything that they could take advantage of. We have plenty of material that you can educate yourself on. We have a first home buyer's e-guide. Phil has actually probably could show up all the material that we've got with the scheme itself, the application form, the fact sheet. It's really critical that if you do want to take care of this scheme, that you do have a broker who knows what they're doing right by your side, help you apply through the process, understand all the different lenders out there. It may mean that you don't go with a major and you go with a smaller tier lender because that's actually better for you, and how that works and understanding all the different products. Thank you, Phil, for this morning. That was very educational. Was there anything else you wanted to add that we might have missed?
Look, Stacey, I just encourage people, if they are first home buyers, and it is a big giant out there when you start looking, I just encourage people to pick up the phone. Let's have a chat. Let's set some yellow brick road guidelines for them. Let's give them the material so they can make an informed choice, so that, you know, I would hate a client to go down and find a home, go down a particular product and pay fees when they didn't have to. So yeah, speak to your mortgage professional first, but if you don't have one, speak to us, because we'd love to help you.
Definitely. Have a lovely weekend, and I will see you on Monday. Thanks, Phil.
See you, Stacey. Have a great day. Thank you.
See you. Bye.